Good evening. Welcome to the inaugural annual meeting of the Chicago Economics Society. My name is Kevin Chang, and I'm the founding president of the Chicago Economics Society. Before we turn the floor to our honored guest, I would like to take a brief moment to introduce who we are and what we do. When people talk about the University of Chicago, economics comes to mind. As most of you know, the Department of Economics has been the birthplace of many innovative ideas in the field over the past century. Yet, there has never been a Chicago Alumni Association devoted to economics. But all that is going to change tonight, because tonight we are here to inaugurate the first official Chicago Alumni Association in economics in the world, the Chicago Economics Society. The purpose of the society is to serve as a platform for Chicago alumni and friends interested in economics to exchange ideas, engage in rigorous discussions on many economic and related issues, meet old friends, and debate and disagree with one another all over again. We aspire to uphold the tradition started by Frank Knight, Milton Friedman, George Stigler, and Gary Becker, the very tradition of rigorous and innovative application of economic ideas to every single area of social sciences, including not only economics, but also sociology, political science, law, as well as our everyday lives. We hope to embrace all Chicago alumni interested in economics, as well as friends from any other educational background who are intellectually connected to the Chicago School of Economics, whether they agree, disagree, or a bit of both. Now, I would like to give the podium to Dr. Siddharth Tiwari, the director of the IMF Strategy Policy Review Department, and the inspiration behind the creation of this society. Ladies and gentlemen, please join me in welcoming Dr. Tiwari.
Hi. Like most of you, I think our greatest achievement, as someone told me before this, was to pass through Professor Becker's course on Econ 301 with honorable marks. Someone else told me on their first test they got 1 mark out of 100, and they felt lucky because there were many who got none. But look, if there's one person in this room who needs no introduction, it's Gary Becker. He's been a force in the field of economics in applying rational price theory to human experiences. He's pioneered several new fields in economics, sociology, psychology, and he's been, for many of us, the face of Chicago throughout our lives. His achievements and honors are numerous. At early stage, he got the John Bates Clark Award. He was awarded the National Medal of Science, 1992, the Nobel Prize in Economics, and more recently, the Presidential Medal of Honor, the highest civilian award that this country bestows on its citizens. With him is Ed Lazear, who also taught us when we were at Chicago. He's a labor economist. He has pioneered personnel economics, studying incentives, promotions, compensation, productivity. More recently, he's focused on culture and language. He's at Stanford University, previously taught at the Chicago School of Booth in Chicago. He served as the chairman of the President's Council of Economic Advisors for 3 years, from 2006 to 2009. And he's the founding editor of the Journal of Labor Economics. Without much ado, I would hand over the mic to Ed. This conversation will last for 30 minutes, and then we will have questions and answers for another 30 minutes after that. Ed, please.
Great. Thank you very much. Well, it's a pleasure to be here with you. This was advertised as a conversation, but as we were walking over, I was commenting that Gary still treats me as if I'm a first-year assistant professor at Chicago. So it's not really going to be much of a conversation. I'm going to ask Gary questions and let him answer, and then perhaps in the Q&A that follows, I may make a point or two. But other than that, I'm going to leave it to Gary for right now. So Gary, let me just start with a general theme. Most people accept that economic growth is the key to raising standards of living. And we know that there are many factors that are important in determining economic growth. Obviously, as the founder of human capital theory, that's probably the most critical in creating an environment for positive economic growth. Could you talk about how we are doing in terms of human capital, where we're going in the right direction, and where perhaps we're somewhat off track?
Yeah, well, thank you, and it's a pleasure for me to be here and address this group. And of course, I'm particularly pleased about the founding of this economic society. I think it can serve an extremely useful purpose, and I congratulate the important movers in this founding, and I hope it succeeds, and I expect it will succeed. And let me add to what has been said. You know, Chicago economics is associated with various points of view on particular areas. Some of them, they've always been controversial. Some of the controversies have died out. Chicago won some battles, lost some battles. I think it won more than it lost, but and there's still a controversy. The role of society is to be broad enough to encompass various points of view and to have debate and argumentation. That's how one proceeds in understanding economics. And in a sense, Eddie and I are here with that in mind. We're going to state some views. Maybe I'll state more because of Eddie's going to defer in this situation. He has plenty of good views and strong views, and I even agree with some of them. But we're going to state our views, and we hope that we get provocative questions. I mean, that's Chicago style. I mean, just because we're professors and so on, and some of you are my students and Eddie's students, doesn't mean you shouldn't ask us, tell us, you're completely wrong. I love to hear that. Of course, I'll say that in return, but I love to hear it. All right, so now with that out of the way, let me talk about the question. Yeah, obviously economic growth is extremely important. I mean, maybe, raising people out of poverty is the role of an economist. It's always been my belief. What motivated me in economics still motivates me in economics. Now, as one thinks about economic growth, as Eddie said, there are a number of factors that are involved. Human capital, though, is extremely important. If you do any simple calculation of the importance of different forms of capital, just an accounting calculation, human capital by far dominates. I mean, it's maybe 75% of all type capital, doing it on a cost basis or on a benefit basis. I don't care which method you take. Of course, they're all important, but in terms of sheer magnitude, human capital is of tremendous importance. Now, it's also important in the growth process because particularly modern growth is basically information-based, knowledge-based, and that's what human capital deals with: how people acquire and produce knowledge, and how that then spreads through a system, an economic system, into the economy. So it's hard to separate the role of human capital in economic growth from the role of markets and the role of government and a variety of other forces. They interact a lot, but certainly in that interaction, if you don't give a lot of attention to human capital, you're in a lot of trouble. Now, Eddie's immediate question was, well, how are we faring on human capital? And then my first thing occurred to me is, who is the we? Who is the we? Do we mean the United States? Do we mean China? Do we mean other parts of the world? If we look at it from the world perspective, there's tremendous investment in human capital that's been going on. You take some of the data sources that have calculated the enrollments and the stock of human capital since 1970. In much of the world, that's been booming, absolutely booming. The U.S. is falling behind. So if we take it as the U.S., yes, is falling behind to some extent in higher education and tertiary education, at least in terms of a fraction of young people who are completing this education. But if you look at it from a broader perspective, I think the world has recognized that human capital is one of the crucial ingredients in the growth process. And within that human capital, of course, education is an important part of the process. Usually, human capital is identified with education, mainly because we don't have such good data on on-the-job training and other types of important human capital that are really important, but we can't measure them as well. Everybody can measure years of schooling. You can take any country in the world and you can measure years of schooling. Maybe the measurement isn't so accurate as in some other country, but you can measure it. It's a poor measure. It's the best we have, so we deal with that a lot. But it's a much broader concept than just looking at years of schooling when we talk about human capital. Now, if you mean, Eddie, how is U.S. faring? Is that what you meant in particular? How is the U.S. faring? Let me come to that. Not that great. Not that great would be my answer. And I qualify, but let me explain what I mean by not that great. If you look at the fraction of people who graduate secondary school, until very recently, that was stable at about 70 to 75%. Depends on what data you look at. It's grown somewhat in more recent years. That's a disgrace, an absolute disgrace, that such a large fraction of Americans should not be completing secondary school in an environment, that's the second point I want to make, in an environment when, particularly in the United States, where the rate of return on education has risen so much since 1980. Return on college education has gone, let's say, in 1979, the premium to the average four-year college graduate over the average high school graduate was about 40%. They earned 40% more. Now it's closer to 80%. Unprecedented increase. If you look at a premium for people who post-college education, no matter MBAs, whatever it may be, masters in other fields, PhDs and so on, it's risen by even more. So tremendous increase in returns, particularly at that level, okay? And therefore, the first challenge is, well, why aren't more people finishing high school? The second challenge is, why aren't more people who do finish high school going on for higher education? We ranked, in 1980, coming back to that year, we ranked third or so in the world in a fraction of young people who had finished the equivalent of 4 years of school. It's hard to compare across different types of educational systems. Let's take that as approximately the right number. Today we rank about 15th to 16th. And where's the major problem? The major problem is young American men are not finishing 4 years of college in sufficient numbers. Many of them are starting and are dropping out. In 1980, to come back again, women dropped out of college at much, much higher rates than men. Today, it's not completely reversed, but men drop out of college at significantly higher rates than women do. Women finish, they get almost 60% of all the four-year degrees, 60% of master's degrees, more than 50% of PhD degrees in the United States. So the big problem is men. Okay, that's where they're the weakest sex from the point of view of education now. And that's not only in the United States, that's almost worldwide. Certainly worldwide, all the rich countries. It's occurring in China, it's occurring in Iran, where my wife's family and my wife is from. And it's occurring in a lot of other countries that are not developed countries by any stretch of the means. Now why? Why is that happening? That's a much harder question, of course, why it's happening. Why are so many people not graduating from secondary school, let's say, if we graduated a lot more from secondary school, we would get a lot more going to high school. And more boys drop out of secondary school than girls, by a considerable margin, actually. The question is, why is that happening? Well, that's a frontier research question, but I'll give you my 3 or 4 reasons that I think have been important. I mean, I don't know if you want me to take so long on this question, Eddie.
Go ahead.
I can talk about it for 4 hours if you want, because this topic interests me a lot. But I'll try to keep it down to 2 hours. We don't have a lot of time here. I would say I have four factors or so. Number one, the family, the deterioration of the family. And I worked a lot on the economics of the family. You know, family economics, the family and economists have generally sort of pushed the family to one side as being unimportant. But it's absolutely crucial in a lot of areas, and I think it's crucial in the area of education. And you can just see it in so much data that if you don't have an intact family, if you don't have parents who care that much about their kids or don't have the time for the kids just don't do as well on the average. Yeah, there's some great kids who manage to overcome tremendous obstacles, but you don't want life to be an obstacle course and just placing obstacles. Some people will get over it. You want to make it smoother. So the deterioration of family, mainly in lower income families, minority groups, and so on. That's your number one problem. A second important problem that I would say would be in the, I'm trying to give them in some order, they may not be exactly in the order of importance I would attach to it. I believe you need more competition in the educational system, so I've been a strong supporter of charter and vouchers. I don't believe it's a magic wand that will solve our education problems, as some voucher supporters believe. And I have some difference with my teacher, close friend, and to me, one of the really great economists of all time, Milton Friedman, on exactly who should be getting vouchers. But I do believe charter, school, and vouchers, to give more competition to the public school system, it is extremely important. A third factor I would mention would be the pay of teachers. I don't believe teachers as a group are underpaid. I do believe good teachers are significantly underpaid, and we have now recent research that is showing. I use showing in quote because you don't want to be too convinced until you see a lot of studies, and only a couple of studies now, but good teachers seem to have a really significant influence on the performance of their students. I know if I look back at my educational career, I had 2 really good teachers in high school, a teacher of English who led me to appreciate poetry and literature. Unfortunately, she would say I didn't follow it up enough, but I did appreciate it, and I really liked that she did. And I had a math teacher who really was excited about math, and it taught me, both teachers taught me one thing: the basic ingredient of a good teacher is a teacher who loves his subject or her subject and who teaches it with enthusiasm. And we don't pay those teachers well enough. We don't attract such teachers well enough. So we should pay good teachers more, fire bad teachers more quickly. Maybe the mean salary would be unchanged, but you have more inequality in the pay of teachers. I think you would have a much better educational structure. There may be a few other factors, but let me stop at that point.
Great. All right. Well, I was going to ask you more on education, but I think in the interest of time, let's move on to another topic. You and I did an op-ed in the Wall Street Journal a few months back, pretty controversial op-ed on immigration. I wonder if you'd talk a little bit about the issue of make or buy, and what I mean by make or buy here is one way to produce human capital is to produce it yourself in the United States. Another is to buy it from abroad by bringing in immigrants who have a lot of human capital. We thought a little bit about one way to do that effectively. Perhaps you could explain that and talk about that in the broader context. Obviously, immigration is going to be a big issue in Washington for the next probably few months at least. So.
Well, and it should be a big issue because it's really important. The way I like to think about it, Eddie, is it's not make or buy, it's make and buy. I mean, that's the way, that should be the optimal policy. We should be improving our domestic educational policy. We went through that already. I'm not going to go through that again. But in addition to that, U.S. has always been a country that attracted a lot of people who were, abroad, and some of them educated abroad, and who wanted to come to this country for the opportunities that we provide. And we were welcoming for a long period of time. One time anybody could come. Most of us, we don't have to go back very far and to find our parents were immigrants. My parents were immigrants, both of them. Came separately. My father went to Canada first and then came to the United States. My mother, her family came to the United States. And then I was fortunate enough that they met. And I'll tell you, I won't go into the rest of it, but fun. And we all have experiences like that. Nothing unique about that. We made it tough for a lot of people to come to this country. And still, it's the #1 place where people want to come to. Because it's still a country where it's easiest. You know, my wife is an immigrant to this country. She was born in Baghdad. I mean, I shouldn't mention Baghdad, and then she was Iranian, but that's what she is. And she came to this country. And we make it difficult. I see how difficult her brothers found it. She went to school here, so she found it really easy. But we make it difficult for people like her to be coming to this country. And we need to get more people coming to this country. We're a pretty empty country. People say, well, we have too many people. We're an empty country. Just fly over the United States. You're flying all the time, Eddie. There's nobody down there. I mean, it's an empty country. So how people can say we have too many people in this country, it's talking nonsense. You just see so much nonsense being spoken on important subjects like that. Now, the way I see policy, and what we wrote about, what I've written about further, and you've written about further, is you need to have a policy where you can attract, one, skilled people who want to come. People want to come to get skills. Unskilled people want to come because they're ambitious. They want to work hard. They want to have an opportunity to work hard. And maybe their kids will go further. What's the best way to attract those kind of people? Okay, we can't go back, in my judgment, to the days of open immigration. I think the welfare state has really made that an impossible policy. On the other hand, we can do things that can well attract a lot of people of all types. And I think the #1 policy, if I had my druthers, would be what we advocated: sell the right to immigrate. Not to just some elite entrepreneurs who pay $500,000 to come here. We do some of that. Canada does more of that. Australia does more of that. Switzerland does that. That's fine. But that's only, you're dealing at the 4th or 5th standard deviation from the mean of people, who you're trying to get. So yeah, you don't want an elitist type of policy like that. You want a policy that applies to everybody. So let everybody who can pay a certain amount come. And I'll come to some of the complications in a moment. I'll try to do this briefly. But who will be attracted? Young people, because they're going to be a longer period of time. It's worth more to pay. More skilled people, because the gain is greater for more skilled people. Ambitious people who, they may not do so well, but they know their kids will do well. People who want to free a society. I mean, all the things that you'd like to have among people want to come. People want to make a commitment. They want to stay in this country, maybe not their whole lifetime, but for a long period of time. So it's a good investment. And so suppose we were charging $50,000. That's a figure that we take out of the hat. One can use it just a point of departure. And you might say, well, not everybody has $50,000. Of course, not everybody has $50,000. So you have to have a system where people can put a down payment. To use a term they love in Washington, you need some skin in the game. So you need some skin in the game. People have to put a down payment down, $5,000 to $10,000, something like that. And then they borrow the rest. How will they borrow the rest? There you might need an important role for government, just like we have a student loan problem. And a student loan problem is a student loan policy is a policy of investing in human capital. An immigration loan problem, a policy, is a policy of investing in human capital. It's a different type of investment, but it's an important investment. The rationale you give for a student loan policy for education applies equally well to immigrants. We have to work out the details. You can work out the details. I won't go into details if anybody wants to discuss them. But that would be the number one way to do it. We'd get the right mix. People would be less hostile to immigrants because they're paying their way. Nobody could say they're not paying their way. They'd be paying their way. I wouldn't say there'd be no hostility. There'd still be hostility, but be less hostility. We'd be taking more immigrants in because there's less hostility. It'd be great for the human capital of the country. It would be just great for the country, just great for the country in general. So we should have a much more open immigration policy, and it really pains me when I see some of the people in Congress in Washington, some of whom I agree with on some issues, and taking such an anti-immigration policy. It's narrow-minded, it's self-defeating, and it's really harmful, I think, to the future of the United States.
Good. All right, I'm going to ask you to be brief because I want to cover two topics in our last 10 minutes.
You don't ask the professor to be brief,
I
do
know,
you?
especially my professor.
Yeah.
Okay, first, you had an interesting blog a couple of years back on good inequality and bad inequality. You've already touched on good inequality, actually, because you talked about it in the context of teachers. You said, in fact, that one of the problems was we underpay our good teachers, and essentially the notion that there's too much pay compression means that there is not enough good inequality. But most people, when they think about inequality, usually think about the bad inequality. They're thinking about people getting left behind. When you started 20 minutes ago, you said, you know, one of the things that motivated you to get into economics was concern about poverty and bringing the bottom up. So talk a little bit about the bad inequality, what its causes are, and what we can do about it.
Well, good question, Eddie.
And you have 3 minutes.
That part isn't as good. Let me try to be brief. Well, you know, all these are big topics, so I'm saying a lot, but they're big topics. On the bad, there are many sources of bad inequality. Every time somebody who has the capacity to do better, earn more, and is prevented from doing so, that's bad inequality. All right. Every time somebody gets special privileges, let's say from the government in particular, they're given a spectrum, and they don't have to buy it. They're given it. That's bad. They make a lot of money. That's bad inequality. Every time somebody of good ability, coming from a poor family, doesn't have the resources, doesn't have the parental guidance or neighborhood guidance to make full use of their potential human capital, and they end up with poor jobs. That's bad inequality. And I can go on and on with what's bad inequality. So there are many sources of bad inequality. Everybody recognizes there are a lot of sources of bad inequality. What people don't recognize is that there is good inequality. In a sense, inequality, I mean, it could be good from a moral reason. I'm not going to get into the moral aspects of it. These are interesting and deep questions, and I have strong opinions about them, but let me avoid getting into those. But just into the fact that as we said, we want to get good teachers. Well, yeah, some people go into teaching because they like teaching. They'll like it even more usually if they get paid more. All right, so a person who could be a good high school teacher saying, well, if I go in, I'll make so-and-so salary. Okay, yeah, I like teaching, but if I go, I take my talents, not to Long Beach, I take my talents to, let's say, becoming a professor or becoming a doctor or a lawyer or so on, I'll make 5 times that amount. Well, I'm making a trade-off. That's what economics is about, trade-off. My trade-off is I'm not going to become a good teacher. So you need inequality to give people the right motivation to do the right thing. That's how an economic system operates. If it's operating well, it doesn't matter whether it's a market-based system, a centrally planned system. You have to create inequality to have people make the adjustments. The process of these adjustments will reduce the amount of inequality you end up with. But for a period of time, maybe forever, you need inequality. So it's a good inequality that people aren't willing to recognize as being important. And I gave examples where it's, at times you need the inequality. Higher earnings for college graduates will attract more people into college education. You can speed up that process, but it will attract more people. You take a policy and we're going to take away all that higher income. I remember I visited China in 1981. Quick story, it won't take a long time. I visited China in 1981. I visited factories. And I'd say, what are you earning? I had somebody translate, and they'd say, well, we're earning this amount. And I go to another worker, a high-level job. What are you earning? Same amount. A third person, what are you earning? The same amount. Well, China, nobody wanted to work hard. Nobody you started to feel it personnel economics. Well, there's a good example. Nobody worked hard. They would say they wouldn't even come to work because they couldn't be fired. I mean, with that type of equality, it's an invitation to ruining a country. And they did a pretty good job at ruining the country until they started recognizing you need to motivate people. So you look at the rate of return in China now. In the early 1980s, the rate of return to college education was about 1 or 2%, as far as one can calculate it. Now, it's quite high. What has happened? You're booming your enrollments in higher education. That's a major force, I think, in leading to China's progress over the last 20, 30 years.
Thank you. Let me shift gears completely. We don't usually ask you, or me for that matter, to speak about macroeconomic or monetary policy, but given what's been going on in Washington with the Federal Reserve right now and sort of the surprise, I guess, that the markets saw last week, what's your thought on what Fed policy should be, how independent should they be, and whether they are on the right course right now?
Well, I think they should be independent. I mean, I've seen a lot of countries where the Fed was an arm of the government, and I thought that it generally led to a poor monetary policy. In every country, the Fed is going to be heavily influenced by the government and so on. You can't avoid that. Every central bank is influenced by the government, but you want to give them as much independence as you can possibly get. As I look at, I'm going to preface this, so it's going to take some time, but it's not going to take a lot of time. Let me say, economics, when I was a student of economics, my first interest was macroeconomics. I studied with Milton Friedman. I co-ran the monetary workshop at the University of Chicago when I was a junior person at Chicago before I went to Columbia University. So I always felt, look, as an economist, I can talk about macroeconomics, I can talk about microeconomics. I may not know as much about each of these subjects, but I don't think economists should say, I'm a microeconomist, and you talk about monetary policy, and gee, I go to sleep, I don't know anything about it. Unfortunately, the profession is becoming that way. I think every good economist should have at least some opinions about each of these. And I have strong opinions about monetary policy. I supported strongly QE1. I thought we had a crisis. You were in the middle of that crisis when you were in Washington, and the Fed took some very strong and important actions. I have been a critic of QE2 and QE3. As I haven't been convinced by any evidence that I've seen that's been valuable. People say we can't stop buying 80 billion or so bonds a month. because the economy will get worse. What's the evidence that the QE2 and QE3 have been important factors in promoting growth in the economy? I mean, it's highly controversial. The evidence is weak, if it exists at all. It's, maybe someday we'll have some judgment on that. I think we have to we should have started already, stopping that policy and trying to make an adjustment where the Fed is not keeping interest rates as low and so on. I think it was a big mistake. Maybe there are reasons we don't understand that are not public, why the Fed, which had announced it was going to start a policy at the last minute, changed its policy when interest rates were beginning to adjust to that policy. Sure, countries were getting nervous, India and people in the United States, bond prices were falling, interest rates were rising, but that's the adjustment we have to make at some point. We have $1.5 trillion of excess reserves in the United States. Somehow we have to try to handle that. So I think the right policy going forward is to start tapering off. Maybe you don't want to do it all at once, but tapering off the purchase policies of the Fed, and in a short period of time end them, end the attempt to keep interest rates so low, let interest rates begin to adjust, and I think the Fed will then have, at some point, if the U.S. regains its growth rate that we should have had, we've had a very slow recovery, the slowest recovery from a recession, despite all the Fed's policy. At some point, hopefully, we'll get a fast recovery. We'll then have an inflation problem. Potentially, the Fed will have to fight that inflation problem. You want to give the tools the Fed at that point, the tools to fight it. So, yes, we made mistakes in my judgment. We should be reversing them already. Okay, that's my comment on that.
Okay, well, we're going to, one more. Okay, all right, one more issue. All right, I wasn't going to ask you this, but since we do have a little bit of time, let's just talk very briefly about health care. I don't want to go into it in too much detail, but again, since we're in Washington, it's obviously a big issue in the debates right now in Congress. What do you see as I don't want to talk so much about the Affordable Care Act per se. Let's talk a little bit more generally about the health care issue as the United States faces it. What's the problem that we face, and why do we face that problem?
In 1 minute, right?
He said we have time, so he's the boss. So.
Well, first of all, a couple of things to put this in perspective. Health is a form of human capital. If you estimate the returns to improving the probability that people survive, they're enormous. Our colleagues at Chicago, Murphy and Topel, wrote a really important paper on that, taking the modern theory of how one measures people's willingness to pay to reduce various risks, which a theory has been around for a while, but taking that and applying it to health area and saying, well, what are people willing to pay to reduce some of the risk of dying? Cancer, cardiovascular diseases, diabetes, all the other killers that we have in society. And it turns out they're willing to pay and just really simple economics. I mean, I teach this in my class, and I show them, I'll give you a few numbers. You don't have to know anything complicated, and I'll convince you why this is why people are willing to pay some more. So it's very valuable. Society should be spending a lot on health. The fact that the fraction spent on health has gone up over time is the right decision because people put a lot of value on it. Then people will come back and say, but the U.S. is spending 16 to 70% of its GDP on health. Switzerland is paying 11%, and there's not any evidence the U.S. in general is doing a better job at healthiness of its population than Switzerland. Now, those are difficult comparisons to make, but I think there's a lot of truth in that criticism. So what's the main problems that I think in American policy? We do some things very well. I mean, more people come to this country if they have prostate cancer, then go anywhere else, although some other countries do a good job on prostate cancer. But I'm involved in various boards, on medical boards, because I've been interested in prostate cancer and some other cancers. And I know, I mean, there's a lot of people come to this country because we have very high level medicine. I think we fall down in certain major areas, and I'm not going to get into the Affordable Care Act. I have my own views about that, but I'm not going to get into that per se. I think we have an excessively low co-payment policy. Switzerland, on the average, co-pay rate is 30% approximately. So that on the average, people are paying, by that I mean out-of-pocket expenses, one way or another, they're paying 30% of additional spending. Less on the really big ticket items and more on the lower. US, the comparable number is 12%. You're starting out with that, you're already really encouraging people to spend enormous amounts. To me, that's one of our number one problems with it. Medicare. I'm still working full-time, so I'm not under Medicare. Now, I'm probably old enough to be under Medicare, but I'm not under Medicare, okay? But what should an intelligent policy be? Any decent country wants to take care of its poor, the health of the poor, and so on, and I'm very strong on that. So we should have Medicare, highly subsidized in various ways. We can improve it for the poor. But there are a lot of people, I mean, the middle income level, the richer people, they should be paying more of their way when they're older, just as they pay more of their way in various ways when they're younger. And I think an optimal Medicare policy would be for the elderly, highly subsidizing the poor and having gradually reduced levels of subsidies for higher income people. They would get private insurance. They would be without insurance. They would rely mainly on private insurance, less on government source insurance. And I think that would have a tremendous effect, because you take Medicare and Medicaid together, they account for total medical spending. I mean, the numbers are, I know in the last year of life, 30% or so of all spending on medicine occurs in the last year of life. So you take Medicare and Medicaid together, they're a really big chunk. On Medicaid, I think, again, it should be for the poor. We should, and children should have a more flexible policy, because if you invest in children's health, that has long-term consequences that are very valuable. But in terms of people who are significantly above the poverty line, I think they should not qualify for Medicaid. So these are a few changes. There are a lot of other things you can talk about.
Great. Thanks very much. I'll ask you to.
So we're going to open the floor up for questions. To request, identify yourself, your name, and indicate to whom the question is directed. There are 4 mics, and we'll take 3 questions at a time. Go ahead, please.
This question is for Professor Becker. Around the time of the 1987 financial crash, in one of your business week columns, you predicted that the crisis would not have a big effect on human capital because it was mostly on financial markets, and this prediction proved to be true. It bore out pretty well. If you had made the same prediction in 2008, it wouldn't have borne pretty well, because what happened after is the ratio of the employed to the working age population has remained, it fell very fast and then has remained stable, but at a very low level. So what has changed? Thank you.
Well, I didn't make the same prediction in 2008, fortunately.
Should we take 3 at a time?
Oh, I'm sorry. I didn't.
Because that'll
Yeah,
probably
sure.
help. Go ahead. Identify yourself.
Sure. I'm Dave Bridgeland, and this is for Professor Becker as well. What do you think of Tyler Cohen's great stagnation claim that U.S. has run out of the easy pickings of from improved human capital, cheap land and technology?
And 3, right behind you. Yep.
Don Griswold. And Professor Becker, I hesitate to ask you this question, which I think was an obvious misstatement, and I hesitate because back in the late 70s, I did the same in a public forum with Professor Friedman, and he publicly humiliated me. But I've got a tough skin, so I'll ask you. Immigration.
I'm a nicer guy than
Immigration, if we have such a big need for an influx of low-wage workers, how is it possibly good economic policy to saddle each immigrant with $45,000 of debt?
Okay, yeah. All right, so, all right, let me take the questions. I'll leave your question for last. Let me take I'll take your question first. I think the hypothesis is nonsense. I see no evidence of that. It's always easy to say. I have a lot of graduate students who come up to me and say, Professor Becker, when you were doing your research, all the easy ideas were there. Now they're not available anymore. You guys picked off all the low-hanging fruit, and we have to pick off the high-hanging fruit. And my answer always is, there's a lot of low-hanging fruit, but whether you notice that it's low-hanging, that's where the insight comes into. So where have we run out of ideas? There's no evidence in a lot of areas of innovation that we're running out of ideas. Maybe we will. Nobody can say we won't, but there's no evidence we're running out of ideas. A lot of innovations are going on. What they will be 10 years from now, I don't know. Eddie doesn't even know. I mean, and you work for the government. You had to make these forecasts, but I never had to make the forecast, so we don't know what they're going to be. But there's always, Alvin Hansen had a theory, secular stagnation, very popular in the 1930s. And he had some of the similar ideas. We run out of the frontier areas, there's no new technologies, and so on. You go back and read Hansen on these. You find exactly those ideas. Well, you read them now, it looks like the biggest nonsense. I mean, at that time, people took them seriously because we were in a Great Depression. People said, well, maybe it's something we're going to live with forever. And people now say, well, we had this recession now, and it's because we don't have the innovations that could come by. We're stuck with this slow recovery. I say it's just as much nonsense as it was in the 1930s. So I don't think we've run out of ideas. I don't think we've run out of land. I say it's an empty country. We haven't run out of increasing the productivity of land. I mean, we have global warming problems. We have serious problems. I'm not denying we have serious problems, but we certainly haven't run out of the capacity to counter these problems. And I think any of the short-term problems we have nothing to do with long-term difficulties. So that would be my answer to that question. Now, on the question on the wage rates, I mean, when you say we need low-wage people, I don't know we need low-wage people. We need immigrants of different types of earning power. You take a typical person from Mexico earning, you'll know that figure better than I would. I usually use they're earning like a $1 an hour. I don't know what the average working Mexican would be working, maybe a little more than that. They come to the United States, they can earn, let's say, $9 to $10 an hour. And we know from the immigrants who have been captured, we look at the average earnings of them, they're earning more than the minimum wage, actually. Now you say, well, here, now that's a low-wage person, okay? They come to the United States, they're going to earn $7 to $8 an hour more than they're earning in the country they're coming from. Multiply that times $2,000, 2,000 hours, you're getting $14,000 a year, plus they don't have the unemployment prospects that traditionally they had in Mexico. Mexico is improving, fortunately. So $14,000 a year, they have a fee of $50,000. They pay that back in less than 4 years. Less than 4 years. I mean, I'm not counting interest rate and so on. So everybody would say, that's a great investment. Where is this a bad investment? If you told me I can invest in a stock and I get a payback in 4 years, I'd say, great, show me where that stock is, I'll invest in it. So even for unskilled workers, the percentage increase in their earnings is going to be bigger here than it is for the skilled workers. The absolute amount is going to be bigger for the skilled workers. But for the unskilled workers, the percentage increase is better. It's a very good investment for the unskilled workers. I just don't buy it as a bad investment. We're not saddling them with the debt. We're providing them with the opportunity to earn a lot more than they can earn in the country they're coming from. And I think that's what they're looking for. They want that. They would take that option if they had it. We just don't offer them that option. Now, on your question, which in a sense I find is the hardest question of the three that were asked, you know, what's the difference between, you were asking, what's the difference between 1987 when you look at the data now, you don't even notice there was a crash. Because in 2007, it wasn't a stock market crash mainly. The stock market did go down, I think from a peak of then $14,000 to $6,000. And let me add, I was smart enough to buy the S&P index at $6,000, so I've done okay. And let me also add, it's one of the few investments I've done okay on. That one I did do okay on because I felt the economy isn't tanked that badly, the things are going to come back. So that wasn't mainly a stock market crash. That was a financial crash, and very different. And we can go into all the reasons, but 1987, we did not have a financial crash. We did not have, we had the savings and loans and so on, but that was small potatoes compared to what we had now. So when you had a financial crash on your hand, when most of the big banks were insolvent, and they would go bankrupt if things were proceeding. When we had some bankruptcy, and I can go on and on, the difference in the episodes were enormous, and that's why they were different. That's why I didn't predict we would see no crash, and that's why it's really hard to compare those two periods.
I want to follow up on this. I know, obviously, Gary, all the questions, you don't have to say the questions are for Gary. They're all for Gary because I didn't talk. But I do want to say one thing on the issue of employment in the recent business cycle. This business cycle is very different from any other business cycle. If you look at the relationship between unemployment and employment, this is unique. So if you were to look at the unemployment rate and plot that against the employment rate, everybody remembers what the employment rate is. It's the ratio of people working to the number of individuals in the working age population. Up until this recent recession, they were perfectly correlated, inversely correlated, of course, but perfectly correlated. When one went up, the other went down. So you could look at the unemployment rate, and that was a sufficient statistic for what was happening in the labor market. If you look from 2009 on, what you see is the employment rate is flat at 58.5%, down from 63.5% where it was during pre-recession times. And the question is why? What's the difference between this recession and other recessions? Essentially, that's a labor force participation issue. But there are a couple of stories that I think pertain to this, one of which by our Chicago colleague, Casey Mulligan. And I know in some ways this has been somewhat made a caricature of because people think, well, it can't be the whole story. But there's certainly something to this. What Casey argues is that a large part of the low labor force participation rate and the low employment rate is a function of government programs. Doesn't say we shouldn't have those government programs, but what he says is one of the costs of having high food stamp programs, having high unemployment programs, having high Medicaid programs, having housing programs, is that it lowers the value of work. And if it lowers the value of work, it changes the value of being unemployed. And as a result, we see people staying out of the labor force more than they did in the past. That may not be the full story, but it's certainly part of it. There's a little bit of it that's demographics. We do expect the employment rate to come down simply because we have an aging population. But that doesn't happen dramatically. And if you look at what happened in 2007, you see it dropping sharply and flattening, that can't be the long-run trend in demographics.
We're going to go down that aisle. Go ahead, ma'am.
Thank you, Professor Lazear and Professor Becker. I'm Jacqueline. I have no economic background at all, but I have very simple and straightforward question for both of you. So we talk about human capital policy. So in your opinion, which country have, or maybe which countries have the best human capital policies in last decades? And also further, which countries do you think are taking progress or have made huge progresses in terms of attracting talents?
Go ahead.
Should we go back?
Hi, I'm Leif Jackson. Nice to meet you. I just had a quick question. I work in education, and what I'm seeing with a lot of our teachers is actually financial incentives might be a dissuader from what they have in terms of intrinsic motivation. I recently read a book on this by Daniel Pink called Drive. And what we're seeing in this country is more, the higher the per pupil allocation, usually that's inversely correlated with the actual performance of a city or a state. For example, DC's in the bottom 20% of states in this country, and they have the highest per pupil allocation in terms of number of students. So how do you maintain the intrinsic motivation of teachers while increasing their wage?
Please go ahead, gentleman behind you.
Hi, I'm Bill Cunningham. I'm chief economist for the U.S. Black Chamber of Commerce. So my question is I have to go to San Antonio on Thursday, right? So I'm going to talk to about 300 small black companies down there. So what should I tell them about the outlook for economic activity in 2014, 2015, 2016, and beyond, especially because, a lot of people have lost faith in the free market Chicago solutions because they didn't hold up so well during the financial crisis, at least the model. So, but that's a whole nother story. So what should I tell these guys on Thursday? Thank you.
Okay. All right. Good question. Let me start. I have a little trouble. You have a pen. You're writing them down. I have to try to remember them. First question was...
You have a better memory. I have a pen.
I doubt it. First question was on human capital. There are countries that have good human capital, good education policy. When we talk about human capital, you're referring, I presume, to education. Our countries that have good education policies in some dimensions, maybe not so good in others. So there are a lot of countries that graduate a much larger fraction of students than we do who educate their high school students very well. Finland is usually mentioned. South Korea is mentioned as another country. And one can go to a lot of other countries. I don't know all the educational systems around the world. The U.S. fails at K to 12. You go to higher education, I would put U.S., the educational system, as a very good educational system. At K to 12, it's highly competitive. We offer a wide portfolio of educational options. You can go to, hope nobody went to it, Santa Monica Junior College. You get some education, maybe useful, and then you can go to the University of Chicago, where you get the best education possible. So you have this variety. And that's great. You want to offer a portfolio. You don't want to only educate the elite, which some countries do. Mexico had traditionally educated the elite. Mexico is doing better now than it was in the past, but educated the elite. I think it neglected a lot. You wrote your thesis on Progressor, right? The Oportunidad Act. All right, that was an attempt to try to correct some of that. And Mexico is doing better. Latin America generally has done a poor job at educating the broad masses of the population. Has been mainly not, and there are exceptions. I don't know every country that well. I know something about Latin American education, but on the whole, it's done a poor job at educating the general part of the population. While countries like Japan and China have done a good job at educating the broad masses. They're not so good. Japan has not been so good at the higher education level. Children work so hard in high school, they're exhausted by the time they get to college. And so you go to Tokyo U, you don't work nearly as hard as you go to one of the elite American universities. On South Korea, some of the same properties to it. So that would be my general answer on the human capital question. The second question was, I can't even remember.
Intrinsic motivation.
Oh, yeah. I mean, intrinsic motivation is important. It's nothing new. I mean, it's a new word for an old concept. The old concept is that people got various pleasures or displeasures out of different activities along with their earnings. No good economist has ever said that people only work for earnings. Okay. To my knowledge, no good economist ever said it. It's sometimes taken as a first approximation because why? Because earnings are important. The way I see it, there may be some people, if they could earn more, they don't want the job. But my experience, and I was chairman of economics at Chicago for a short period of time, I didn't find any of those people in my department, I'll tell you that much. I mean, people have intrinsic motivation, and you can offer some people a lot of money for work they don't want to do, they won't take it. So they don't only respond to monetary incentives. That is correct. Maybe that needs to be emphasized more, but economists have known that, and particularly modern labor economics has certainly well recognized that point. And there may be some people for whom there's a conflict between their intrinsic motivation and their pay. But if you tell me that if we offer people who can get good teachers by various measures of what a good teacher is, and we now have measures, I think, that are halfway reasonable, and that by paying those teachers more, we'll get fewer of them in the profession, I challenge you to find me any hard evidence to support that hypothesis. I don't think there is any evidence to support that. I think most teachers would say, yes, we're not going to be repelled by offering us more money, whether we're a good teacher or a bad teacher. And I don't know of any profession where people have said, yeah, pay us less, we'll get better people coming into the field. So I think that's just misleading. Now, what you should tell these black entrepreneurs and businessmen on your visit, I think that was the question that you raised. I think that was the question that you raised. I'm generally an optimist. I think we've had poor policies for several years on economic policies. And I think those policies contributed to the slower growth of this country. But I think this country has enormous strengths. We have tremendous entrepreneurial people. We have a hardworking population. We have independent-minded people. And so I anticipate, if I had to predict what the economy would be like in 2014, 2015, I think we're going to be a stronger economy. I think we'd be even stronger if we followed better policies. I think we're going to be a stronger economy. So I would tell the business people that you're meeting a couple of things. One, that the opportunities for blacks in America have improved enormously. And my doctoral dissertation was on racial discrimination, so it's a topic that's interested me since I was a graduate student. They've increased enormously since the time I was writing, since those days when blacks suffered enormous discrimination and really had limited opportunities. They've increased enormously. And so a black businessman or woman who has good ideas, they'll find people to finance them because the financing is going to get easier. And that you should encourage them. You can say, look optimistically. Things are going to get better. Opportunities for blacks are better. But it's a society where you have to prove what you can do. You have to prove that you have a good idea, that nobody's going to hand you anything on a silver platter without having ideas. You have to work for it. And I think, fortunately now, we reached a point in the United States history while we still have discrimination on various criteria against various groups, but we don't have the kind of vicious discrimination that blacks and women and other groups have suffered for so long in this country.
Okay, we're going to take last two questions, so I apologize to those who don't get a chance. Gentleman in the gray suit at the back, and then gray suit in front.
Thank you for being here. My name is Andrew Herther. I graduated from Booth, and I work on the Hill. Professor, you touched on the deterioration of the family as a partial contributor to men not succeeding as much in education, maybe as they had in the past or as they should. And my question is about public policy as it relates to family formation and the deterioration of the family. Many of us have read Coming Apart, and we see the statistics. Marriage increasingly seems to be a luxury afforded only to those of the upper middle class and the upper class. What are public policies that actually work in maybe arresting trends in family formation? And it seems too often conversations about family formation deal too much with tax credits and welfare policies. But it seems that not many people get married for tax benefits, and not many people have a kid because of welfare reasons. Can you put maybe a human element on a public policy prescription to restore family formation?
This is for gentlemen, either one of you. My name is Byron Boston. I'm a class of '86 from the University of Chicago Business School. I'm president of a mortgage REIT. It's a public fund managing mortgage-backed securities, so it's around housing policy. U.S. housing system has been at the center of the global financial system. Your thoughts on the potential changes that either should be made to the current housing structure, some specifics. What do you think about the 30-year mortgage? The U.S. enjoys this privilege of a 30-year mortgage, heavily because of the structure where you've got a Freddie or Fannie or Ginnie Mae involved in the system. I'd love you to just elaborate on housing policy, the role it played in '08, the role you think it'll play in the future.
Oh, let me just say that these have been great questions. I mean, so great I don't know the answer to a lot of them. But let me try. Family policy is really difficult. It's not easy. I mean, because why? You know, we're all reluctant to interfere too much in such a personal relationship as husband-wife relationship, or two gay relationships, or family-child relationships. I think for good reasons. I mean, these are decisions that nobody else can make usually as well as the people making them, or whatever they are, but not always, okay? So as I look at public policy with regard to the family, I think it's not going to be easy to shift around a lot of the trends we observe. That's the number one thing I'd say. Because you observe them throughout most of the world. The U.S. leads, unfortunately, in a lot of them, but they're occurring everywhere. Family, is breaking down. Not breaking down, it's maybe a little too strong, but divorce rates are up. Single parent raising children is rising. It's rising in Korea and Japan as well as here. It's just much lower there, but it's rising there. Divorce rates are rising rapidly at a rapid rate in these other countries. So there are basic economic forces that are and social forces, but let me say economic, that are producing these changes in the family. They're not just some accident of bad public policy. They're basic forces. When you have basic forces like that, they're not easy to turn around. You want to be careful introducing policies to turn around. The problem when you deal with the family is they have third-party effects, and mainly on children. If all family was affecting was a husband and wife, and that should be just left to them. They want to break up, that's their decision. They want to do some other things, well, to me might look crazy. I say let them do it. I mean, they're affecting themselves. The difficult thing with family policy is that we have children who are affected. Now, most parents love their children. Nevertheless, they're making a trade-off. They can't stand their spouse, and they love their child. Should they stay married or should they break up? Let me give you a basic conflict that people have. Now, how do we get into that problem in a way that doesn't interfere too much in their decision? So we could eliminate any policy that penalizes people being married, any tax policy. That would be the obvious place to start, not penalize people who are married. Do we want to have a positive subsidy for marriage? That's a tougher question to answer. On the whole, I believe maybe. I find it tougher because I distrust government in general, and I don't know where this policy will go, how it will be in order. So if I had an ideal social plan, I might say, well, let's have a policy to subsidize marriage. In the real world, where we have real governments and so on, I say, well, I'm not so sure. That policy wouldn't be badly misused. I mean, do we want to have a policy with regard to children? I'm going to speak this coming summer, in China on the one-child policy. To me, one of the most disastrous policies in social engineering that has been attempted in the modern world. Now, that's a strong statement, and a lot of people won't agree with me, but there's increasing discussion in China of why the one-child policy has turned out to be so disastrous. People weren't so aware of it at the time, although a lot of people are always suspicious of it when you're interfering that much into family decision-making. And now, with the relatively low number of young people, high number of aging people, in still a relatively poor economy, I mean, China has really created an enormous problem for itself, in my opinion, and the opinion of many other people. So I'm very careful about getting into family policy. So I say, I don't know how much we can do about it. I think, but if whatever we do, we should bear in mind that adults make the decisions and bear the consequences of their own decisions as long as it's influencing themselves. Any policy that the government should be involved in should be saying, where children are harmed by what the parents are doing, how can we reduce those harm? And I don't have a panacea to that, but that's the way I would approach it. Now, on housing, well, I'll say the following. I believe Fannie Mae and Freddie Mac should really be eliminated fundamentally, not overnight, but should be basically eliminated, and this quasi-government organization should not be so active in the housing market. I haven't seen any evidence that has convinced me, that has said that owning a house per se makes households more responsible or better than not owning a house. Yes, there are correlations. People own houses, vote more, and so on, but the causation is a much tougher issue to get at, and I'm not convinced that that's an important factor. So I think the housing market had too much regulation in it, too much attempt to force greater housing ownership in the United States based on very little social science proved evidence. So my first step, if I had control, would be 30-year mortgage. I have no idea whether we should have it. Let the market decide whether there's a 30-year mortgage. If there's a market for it, then there'll be a market for it. I don't see anything good or bad about it, but I think that's something that should be allowed in financial markets. Can you offer a fixed interest rate 30-year mortgage in an environment where there may be inflation, maybe interest rate changes? Well, who am I to say whether we can do that or not? I let people putting their own money at stake make that decision for now. But I do believe that the source of the housing market was partly the fault of the people in the housing industry and the loans they made and so on. People should have known better. And it was partly the fault of the government forcing subprime and other loans that should not have been made for people who should not have been owning homes, at least in that environment. Okay, there's a lot more that could be said on all these subjects, but that would maybe will suffice for now.
Kevin will close the evening, but before that, join me in thanking Gary Becker and Lazear.
Thank you, Professor Becker and Lazear, and thanks to Dr. Tiwari. Before we end tonight's event, I'm pleased to make an announcement. The Chicago Economic Society has decided to designate the current academic year as the year of the reunion. Next summer, in conjunction with the grand opening of the Becker Friedman Institute building, the Society is organizing the very first global reunion for all economic alumni throughout history together in Hyde Park. To find out more, please send me an email. For those of you who are friends of Chicago, I'm also pleased to tell you that we have a pipeline of events lining up just for you. And if you want to find out more about our program, or if you want to volunteer, or even start a local chapter, please visit our website at www.chicagoeconomicsociety.org. Once again, let me thank each and every one of you. Until the next event, I wish you all the best. Thank you. Good night.